While you were reading this morning's quarterly reports, 3 more community banks just announced they're losing market share to neobanks, not next quarter, not next year, right now. And if you think your core banking system gives you some kind of protective moat against digital-first competitors, you're about to discover why that security is completely false. I'm here with insights from Advanedge Consulting, where we help traditional financial institutions bridge the gap to the dynamic world of fintech. Today, we're diving deep into the cost reality that's hitting banks across the country, and why waiting isn't just expensive, it's existential. Here's what's happening in the banking landscape right now. Every day you delay modernization, digital-first competitors are capturing more of your potential customers. They're not just offering better rates, they're delivering experiences your customers now expect as the baseline. Mobile-first onboarding, instant payments, real-time loan decisions, AI-powered financial insights. While traditional banks debate budget allocations in committee approvals, neobanks are launching new features weekly. The gap isn't just widening, it's accelerating. And the institutions that recognize this reality first will be the ones that survive and thrive in the next decade of banking. Let me share what we're seeing across the institutions we work with. And it's more urgent than most executives realize. Last month, we analyzed the customer acquisition costs for a regional bank that came to us after losing nearly 15% of their checking account growth to digital competitors over 18 months. Their cost per acquisition had jumped 43%, while their digital competitors were acquiring customers at a fraction of that cost. But here's the deeper problem most banks are missing. It's not just about customer acquisition. It's about customer lifetime value erosion. The customers you're losing first, they're not your least profitable ones. They're your most digitally engaged, highest growth potential customers. These are the customers who would have grown with you, expanded their relationships, brought in referrals. Instead, they're building those relationships with institutions that met them where they already were. Digital first. We recently worked with a community bank that discovered something shocking in their data. Their most profitable customer segment, millennials and Gen Z with growing incomes, were choosing their institution for initial services, then moving their primary relationships to digital competitors within 6 months. Why? Because once they experienced truly seamless digital banking elsewhere, the friction in their legacy systems became unbearable. The cost isn't just in lost customers. It's in operational efficiency. Institutions we work with typically discover they're spending 60 to 70% more on manual processes that their digital competitors have fully automated. Transaction processing, account reconciliation, customer service inquiries, even basic reporting, all still requiring human intervention because their core systems weren't designed for digital-first operations. One credit union we helped modernize was spending nearly 2 full-time employees' worth of hours each week just managing the workarounds needed to make their legacy loan origination system communicate with their digital channels. That's not just inefficient, it's unsustainable. And here's what keeps executives awake at night: the regulatory risk. Legacy systems weren't built for today's compliance requirements. Every manual workaround, every integration gap, every process that requires human intervention, that's a potential compliance failure point. The cost of regulatory violations isn't just fines. It's reputation damage that takes years to recover from. This is where the transformation patterns we see across institutions become crystal clear. The banks that are winning right now, they're not just updating their technology. They're fundamentally reimagining how banking works in a digital-first world. Let's talk about core banking modernization first. The big 3, Fiserv, Jack Henry, and FIS, serve about 70% of U.S. banks. These platforms have evolved significantly, but here's what most institutions miss. It's not just about choosing the right provider. It's about implementing these systems in a way that enables true digital transformation, not just digital veneer. We've helped institutions migrate from legacy core systems to modern platforms, and the transformation goes far beyond faster processing. We're talking about real-time analytics that enable personalized customer experiences, API-first architectures that allow seamless integration with Fintech partners, cloud-native scalability that eliminates the capacity constraints that have held community banks back for decades. But core banking is just the foundation. The institutions that are truly competing, they're leveraging AI throughout their operations. Predictive analytics for risk management, Machine learning for fraud detection, natural language processing for customer service automation. We've seen institutions reduce their loan underwriting time from days to hours, not by cutting corners, but by automating the data analysis that humans were doing manually. Blockchain technology is reshaping how institutions think about payments, identity verification, and transaction transparency. The banks that dismiss this as cryptocurrency hype are missing massive efficiency opportunities. We've helped institutions implement blockchain-based solutions that reduce settlement times and eliminate intermediary costs. And digital payments. This isn't optional anymore. Institutions we work with are discovering that payment modernization isn't just about customer convenience. It's about capturing fee revenue that's flowing to payment processors and fintech companies. Real-time payments, embedded banking, API-based payment solutions. These are revenue opportunities, not just cost centers. For lending specifically, we've seen incredible results when institutions modernize their loan origination systems. Ambergo, for example, is a best-in-class loan origination system that accelerates lending workflows dramatically. We've helped institutions implement Abrigo to streamline their entire lending process, from application to approval to funding. The efficiency gains are remarkable, but more importantly, it empowers institutions to make faster, smarter lending decisions. In a competitive lending market, speed and accuracy aren't luxuries. They're survival requirements. So what can you do right now? First, audit your digital customer journey honestly. From account opening to loan applications to daily banking tasks, where are the friction points? Every click, every form, every delay, that's a competitive disadvantage. Second, evaluate your core banking platform's API capabilities. If you can't integrate seamlessly with fintech partners and third-party solutions, you're locked out of the innovation ecosystem that your customers expect. Third, assess your payment infrastructure. Can you offer real-time payments, embedded payment solutions, mobile wallet integration? If not, you're losing transaction volume to competitors every single day. At Advanedge, we help institutions navigate these transformations systematically. Our digital payment implementations typically show ROI within the first year. Our system integration projects eliminate the operational inefficiencies that eat into your bottom line. And our regulatory navigation ensures that your modernization efforts enhance your compliance posture rather than complicate it. We've guided institutions through complete digital transformations, from legacy core banking systems to modern API-first platforms that enable innovation. From manual lending processes to AI-powered origination systems that compete with any fintech. From basic mobile banking to comprehensive digital ecosystems that customers prefer over digital-only alternatives. The future of banking belongs to institutions that embrace transformation, not as a technology project, but as a business imperative. The banks that thrive in the next decade won't be the ones with the oldest legacy systems or the deepest traditions. They'll be the institutions that combined their relationship strengths, their community knowledge, and their regulatory expertise with technology platforms that meet customers in the digital-first world they already live in. Your core banking system isn't protecting you from disruption. Without modernization, it's accelerating it. The question isn't whether to transform. It's whether you'll lead the transformation or be forced to react to it. The cost of waiting is higher than you think. The next video proves it.